In this video, I'm going to talk about how to become the bank. I hope you will stay for the entire video. I have some very interesting kind of more details, information about if you're really interested in becoming kind of like the bank. So everybody wants to be the bank. I mean, we keep seeing these beautiful buildings and ancient and very impressive and intimidating buildings that we see, which is kind of like the traditional bank. And of course, here I'm not talking about how you become a chartered bank with billions of dollars of deposits and stuff like that. But what I'm referring to is how to be the bank, to be a lender, an active participant in financing projects for other people. And the first thing for this is that you will need to have the actual liquidity, capital, money in order to be lending the funds to other people. So that's going to be the critical element. It is possible to also borrow other people's money and use that money to finance some other deals. Obviously, the risk is a little bit higher. And you also have to make sure that you have a nice cushion, a nice margin on top of the rate that you're getting. So that assumes that you're borrowing money at a lower rate than what you're lending at. And sometimes what you also have in the front end is something called points, which is basically kind of like your fee to put this deal together and deal with the other people's money. But right now, I'm just going to start very simple, right? So let's say you have the money and you want to lend to someone. So you probably have that money around somewhere. So it could be in your savings account and not doing anything at the 0% interest. It could be under your mattress, also not doing anything, and then between cushions. So just look around and find these savings accounts and then pull them together. The other thing too that you can look at is retirement accounts. So if you are with a traditional custodian, a traditional company that holds this account, like a Schwab or E-Trade or something like that, or TD Ameritrade, they're very restrictive in terms of what you can invest in. You can borrow a certain limited amount of money from that. I believe it's $50,000, and then you can basically lend that. But it's limited pretty much at that amount. So you cannot go and then invest in somebody else's deal. You can convert these 401k and migrate them to another custodian and have a self-directed IRA or self-directed, like a solo 401k, for example, where you can use these funds and actually invest in real estate and also lend money on either as a private money lender or hard money lender. So that's pretty interesting. And then all the payments basically go back into your 401k. So they don't come to you after that, they go to your 401k. It's basically your 401k, your retirement account that's lending the money, but you're controlling the funds, obviously. And finally, you may have access to equity. So look at your house, for example. You may have a line of credit that you can use, a home equity line of credit. You may have other other assets that you could potentially leverage and extract the funds that you can then lend to other people. The home equity line of credit typically is pretty affordable. You can probably get it at maybe like 4% or something like that, and then you can lend that money. The interest goes back into your line of credit, and then when it gets paid back, then you pay off your line of credit. So that's pretty attractive. It's also very flexible lending as opposed to going to the bank and actually getting a loan. So now you've found the money, you found your pool of money, and then you're ready to lend it. It's important to know how much you want to lend. So you probably want to kind of split up the funds into maybe 3 or 4, so that you don't have all your money into one particular project. So you want to spread the risks a little bit, have different people basically borrow from you on different projects. So where are you going to find these projects? Where are you going to find these opportunities? So you need to kind of, you have to look around, and you may have to, you can look on normal social media, But you may also change your profile to say that you are a private money lender and start kind of advertising the fact that you are a private money lender. That means going to potentially, changing your LinkedIn account, your Facebook account, and all of that, so to make people aware that you are a private money lender. Then after that is going after kind of networking, like who do you know that is looking for money? Who are the real estate investors that are probably looking for money for some of their projects? So these real estate investors, they're good people to invest with typically, because your loan would be protected by a lien on the property, so they can't sell the property without paying you first. So these are kind of like very interesting and very they may be a little bit difficult to find, but I mean, you can find those people that as you network more and more, you will find more and more real estate investors that are looking for funds. Real estate investing is very cash consuming kind of business, so you're always looking for money. Even me, I'm constantly raising money. So yeah, it's a never-ending job. You always can use more funds to do bigger projects or more projects, etc. So that's kind of how the business goes. Then you have to establish kind of your lending criteria. So there's obviously, you know about how much money you're willing to lend to a particular investor, but you also want to make sure that you protect that investment. And the way you protect that investment is really identifying kind of like, you want to be in the first position, what's called the first lien position. So you want to have a piece of paper that's registered with or recorded with the city, state, county, to basically say that, hey, this property, there's a lien on this property. There's this owner, this landlord cannot sell the property without paying me first. So that's something that's very important. So that would be in the first position. You also want to establish what's called loan to value or loan to cost kind of ratio. So how much are you willing to lend to a project that maybe it costs like $50,000 to buy the project, there's a $50,000 in renovation cost. How much are you willing to provide that, so that assume that the project goes nowhere and then the project is stopped completely? Where do you land on that? How much are you willing to protect your asset? So typically you could go like 75%, 80% on the loan to cost, that means the purchase price and the renovation cost together. Sometimes they would put 75% of the purchase price and 100% of the renovation cost to kind of come up with these ratio. So you have to look around, see what other private money lenders are doing, and you can look for that online as well. You want to make sure that you have skin in the game, so that not you, but that the real estate investor, the person that's borrowing the money from you, has skin in the game. You don't want someone that you're lending the money to, they are not investing any money at all, and it's all being borrowed by all kinds of other individuals. You want to make sure that if the project goes sour, that they're going to lose a significant amount of money and it's going to be painful to them, and that should be a good motivator for them to finish the project and get it done. So I've invested in a couple of projects in the past, and then the real estate investor, I didn't follow this rule, and the real estate investor basically had borrowed money from other investors to cover the rest of the cost, and he basically didn't have the motivation really to get the project done on time, and we ended up losing a lot of money on that. Then you want to kind of look at how much are you willing what is the cost that you're going to charge for borrowing the money from you. So this could be obviously interest rate. Are you going to charge points, or are you just going to do the straight interest rate? You can look around for some of the interest rate amounts that are out there. It normally varies between like 5 and 12%. So some with no points. So sometimes there are points, then you obviously would reduce the interest rate. So these are things that you want to be competitive on one hand, but you also want to have enough interest rate in there to make sure that it's worth your while and covers your risk for that. You also want to make sure that it covers your cost of money. So if you have a line of credit or something like that, you want to make sure that the interest rate that you are charging your borrower actually covers at least your interest rate for your line of credit. So I hope you found this information helpful and that you will look at maybe doing private money lending and being the bank. If you like this video, make sure that you click the thumbs up. If you like anything that deals with real estate investing, entrepreneurship, investment, even the stock market, and if you're interested in financial freedom, make sure you watch the rest of the videos on my channel. Don't forget to subscribe to the channel and click that notification bell to make sure that you are notified whenever a new video is posted. Thank you.